Hello friends, welcome back to James's Gems of the Week, the show in which I, James Stevenson, take you through, well, along with Loki, when Loki is cooperating, take you through. You want to say anything to the audience at home, Loki? He does not want to say anything to the audience at home. You seem like you're my prisoner in some of these videos, Loki. He just wants to get back to his bed. It's so darn comfortable, is the problem. The show in which I, James Stevenson, walk you through all the tweets that I liked over the past week on Tesla Twitter and explain to you why I liked them. So without further ado, let's get straight to where we left off last week, which was with this tweet from the Short Shorts historian and that Martin Vieca video he showed from his car, where he had a close call that the Tesla prevented. Let me get myself centered in the frame a little better here. All right. So let's see this next tweet here from Pierre Boudreau, at Pierre Boudreau on Twitter. Total sales of Class 8 trucks is below 300,000 units per year for all major manufacturers. Now, why would I like that tweet, and why would I be only one of two people who liked this tweet? What's this tweet about? Let's go see the context. So Pierre started this thread with the quote, "Those people are what I like to refer to as wrong," attributing that quote to me. Yes, so I had to explain to people, hey, that is, maybe I can just move this camera a little bit. There, that's a little bit better. I can stay closer to the mic that way. So I had to explain that I was referring to people who expect Tesla to sell greater than 1 million Tesla semis per year. I like your optimism, but no. So the response, somebody said in 2023 no, and that's when Pierre came back and said, hey, the entire size of the market for Class 8 trucks, trucks that can pull a tractor behind them, big, strong trucks, tractors, it's just not that many vehicles per year, right? So could Tesla increase that in some years if there was this sudden industry-wide eureka moment where they figured out, hey, it's way cheaper to have EVs than it is to have diesel-powered machines that require a ton of maintenance and are very thirsty for fuel that gets more expensive? Yeah, it's possible that Tesla could sell a large fraction of this for some years, but no, Tesla will never have a year. Write this down and put my name under it. Tesla will never have a year where they sell 1 million Tesla semis. That's not going to happen. It's just, there's just a lot less of them getting bought every year than there are passenger cars. All right. The next tweet that I like came from My Tesla Weekend, at 4K Podcast on Twitter. That's Brian. So your chart shows Tesla further and further into the red, checkmate. And then in brackets below, hastily blocks everyone who points out the glaring error in my understanding. Well, let's check this out. What are we talking about here? Oh, it's my Tesla versus BYD chart here. Now, I do have to mention the chart crime that I committed on this chart, but first I'll just show it to you. Hey, what's the net income like for these two companies, BYD in blue, Tesla in red? If you look at the years 2017 through TTMQ2, I'll come back to this asterisk in a minute. So Tesla used to lose money, and then they passed zero back in 2019, and they've been growing a lot since. BYD has, some might say suspiciously, been reporting low to mid single-digit net income as a percent of revenue every year for the past 6 years. Thinking face emoji. All right, so that's what this tweet was about. Tesla further and further into the red because Tesla is shown in red bars on the chart. So here's that footnote that I promised you, see receipts and a very important footnote on TTMQ2 2022, more like a citizen's arrest for my chart crime. It is TTMQ2 2022 for BYD, since that's what I have. I don't forecast BYD, but it's my full year 2022 forecast for Tesla. So the TTM number for Tesla would be lower than this. I just happened to not catch that that's what I had done until after I had tweeted it, and then I went back and looked at it and found it and went, oh, I need to reply to that right now and explain to people what I did there. So that's not the way you ought to do a chart, but it is the way that I had already published this chart that a lot of people had liked already. So I just wanted to explain what it is, and I footnoted it here as well on the graphic in case this gets shared in the future without attribution, so it'll at least be on there. But yeah, you can find BYD's income statement online at this address, which I did, and then just overlay the headline revenue and earning numbers at the bottom for Tesla and compare them and see how these two companies look against each other. BYD is a great company for people who do not want to make very much money because they don't appear to be able to make a lot of profits, or they haven't demonstrated that they have the capability to this point. Maybe they will in the future. The next tweet that I liked came from the Shorts Historian at Tesla Historian on Twitter. This day in Tesla Q history, dear Tesla charts, you were wrong. Dear world, hashtag Tesla Q is right, is what Tesla charts tweeted on September 18th, 2018. Well, yeah. The chart tells the rest of the story. I just like all the tweets that come from Tesla Historian. Maybe you've picked up on that. Tesla on the news 4 years ago. Tesla CEO Elon Musk is a nice guy who doesn't know how to run a car company. Tesla has no tech advantage, no software advantage, no battery advantage, no advantages whatsoever. So here's Bob Lutz. So he used to run General Motors, or at least most of it. He was never the CEO, but they sent him out to do press for GM a lot. And yeah, I had to give myself some credit, a little pat on the head or attaboy to myself for 4 years ago, on the day this video was first published, having said actual footage of Bob Lutz trying to catch up to 2012. So you can see here from The Simpsons, this is Grandpa Abe Simpson here, trying to catch up to the turtle who stole his false teeth, which I like, as a good analogy for Bob Lutz and how he was trying to catch up to the EV world. Oh, and then I hit the wrong button. So here we see a tweet from Matt Smith. Maybe I'll like this tweet. There you go, like. I'm actually very impressed with how good the latest FSD beta handles the vast majority of situations. It seems that many of the most difficult problems have been solved, and much of the remaining fine-tuning is going to make the maneuvers more comfortable and natural. So I did reply to this tweet earlier, saying agreed, there's plenty of room left to reduce jerkiness and hesitancy. So I had an FSD beta drive myself this morning, and experienced some hesitancy and some jerky driving. Safe driving, but just a little jerky. So I'm going to head back to my likes and scroll on down to where we were, which was with Grandpa Abe Simpson. It was with Bob Lutz. I commented in that thread that we just saw. Here's the next tweet that I liked from Pierre Farragut. You saw, hashtag Tesla, wait times dropping. Is that a concern? You probably haven't seen a thorough analysis of what it means in terms of order momentum and demand. Here is the analysis, only at New Street Research, not investment advice, just complementary analytical work. Alright, so let's see if this will get bigger. It will. Excellent. And I'll have to hide myself and then remember to unhide myself later. So what's Pierre saying here? The headline at the top, low production went along with lower orders in 2Q. All indicates growth is now resuming. Decreasing wait times are likely reflecting sequential order growth in 3Q and 4Q, even if backlog will likely remain stable. LHS, Tesla orders, backlog, deliveries, RHS, wait time in days. Okay. So what do we have here? We got some bars, we got some lines, we got some boxes. 2Q 2022, what's the note here that has those boxed? Tesla production and deliveries declined as a result of the Shanghai lockdowns that watchers of my channel will recall having heard me talk about many, many times. Resulting in an increase in wait time, lower order intake, down around 20% in our estimates, but on par with fourth quarter of 21 levels. Then for the remainder of this year, that's the number 2 box, Tesla set for a monster quarter in terms of deliveries, the Shanghai, Berlin, and Texas ramp. Taking into account the recent decline in wait time, we still expect order growth to resume. Backlog won't increase much, though, as production capacity increases significantly. So, is it always a bad thing when your backlog declines? Well, no. Is it always a bad thing when your backlog increases? Well, no. Now, if you've got a Tesla Q logic flowchart in front of you, those both are bad and mean that Tesla is doomed. But if you're an analyst, you look for the reasons why there's a backlog and for the reasons why the backlog is decreasing. All right, so the pink bars here are giving you the end of quarter backlog, rising, 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 and then decreasing in future quarters. So the green bars here, or teal or blue, or whatever you want to call this darker bar, are the orders, rising, rising, decreasing in the second quarter, as noted, and then growing from there. So the wait time in days peaked in Q2 and ought to fall back afterwards. And expect a monster beat in the third quarter for earnings and a rapidly growing cash pile beyond. So yes, Tesla is free cash flow positive, has been for a long time, and continue to produce more cash than they need to fund their ongoing operations. And they've been using some of that extra money to pay down debt, and now they have almost no debt left. So yeah, it's going to start to pile up. So good stuff from Pierre there. Next, a tweet from the Limiting Factor at Limiting the. This is Jordan Giesige. The pack of a Tesla vehicle is designed to drop from the vehicle during a fire. You beautiful geniuses, you. Now, I'm not going to read this whole thing to you, but I will read this middle part. Model 3 and Y are both designed with a top cover of steel and a bottom enclosure of aluminum. Once it hits high temperatures, the bottom will melt at the lower melting point of aluminum. The top will not melt because steel has a higher melting point. And what does that do? It causes the cells to drop out of the bottom. So when the bottom case of the battery pack melts, those cells fall out, and that makes it easier for firefighters to put out the fire, whether they're using water or foam. Foam is recommended for EV fires to rob it of oxygen so it stops burning. But either way, you'll do better if you can fight that fire directly with those cells spilled out on the ground under the car instead of up in the frame of the car. So, thought that was interesting. I had never heard that before, so that was a good thing. Next, a tweet from Bradford Ferguson at Brad S. Ferguson on Twitter, quoting me, "I cannot explain to you why someone who supports Tesla would set expectations for their followers so high that there is no possible way for Tesla to achieve those goals. So Bradford rightly apprehended that I was addressing the 50% gross margin expectation Value Analyst 1 has set for followers of that account. You can see there is no link on this account for me because I block the Value Analyst 1 account on Twitter as someone who I can't figure out. I probably can't say it any better than I said it here, which is this does not seem like someone who supports Tesla to me. I don't understand how someone who supports Tesla would try convincing all of their followers that Tesla is going to report 50% gross margins and 40% operating margins in Q3 and Q4. Those are unachievable numbers. Tesla, you heard it here first. Tesla will not achieve those numbers. That's too sharp an increase to happen. Maybe in a few years, not this year. I like that tweet from Bradford. Next, a tweet from Tesla, at Tesla, 10,000 Model Ys built at Giga Texas to date. So this is a great update. I love getting these from Tesla when we get them, because we don't get them very often. But that picture doesn't even get very much bigger when I do that. But there's the team. Congratulations, Giga Austin team, on producing 10,000 Model Ys. And next, we have a tweet from Elon Musk. Exactly. Well, what's exactly? Let's scroll on up here and see where this started out. Oh, sure, it's with Robert Reich repeating the often repeated myth that Elon Musk came from a family that owned an emerald mine in apartheid South Africa. Well, that's a lot of lies packed into one sentence. So Elon replied to him, "You are both an idiot and a liar." Liam Neeson, not the real Liam Neeson, this is the Liam Neeson. I did a double take on the cool guy here in the sunglasses, who tweeted every word of that is true, Elon. And Noppenloy is here at ENN underscore NAFNLAUS on Twitter, who you should be following if you're not, because this account is great. It's not true, and this link is to J. Arnold report, Jeremy Arnold, who extensively researched this question and debunked the myth that that Elon Musk became wealthy because his parents owned a South African emerald mine. None of that is true. And that's what Elon said exactly in reply to. So go check out this article if you haven't read it already, and find out one by one all of the lies packed into that myth. Okay, so I like that tweet. Next, another tweet from Matt Smith, who we just saw at MacChasmMatt, saying James is an amazing analyst and Tesla Q's incompetence is astonishing. So he's not replying to anybody there. He's just retweeting me here, saying, this was the video that featured his interaction with John Engel from my Tesla forecast thread. So you've probably been following along with my Tesla Q3 2022 video review series. This was part 22 from that series. So I'm not going to tell that story again because I've told it a few times now. Next is a tweet from Dutchy Wiggins. Best part is no part, misunderstood. Well, what's this talking about? Up here, it's just an eyes-looking emoji. Yep, from Earl of Frunkpuppy at 28 delays later. Retweeting Wesh2 News at Wesh. As many as 45,000 Fords can't be sold because they're missing parts. The best part is no part. So I had to reply with underrated tweet there on that one. Best part is no part, except if the lack of that part prevents you from selling a vehicle. All right, next a tweet from Stephen Mark Ryan, at Stephen Mark Ryan. James Stevenson versus Tesla Q is the intellectual version of Mike Tyson versus a punching bag. That tweet made me laugh. So he was replying to this tweet that I created as a handy resource you can share with anyone claiming Tesla's demand has already peaked. Just ask them to fill in their latest forecast for Q3 deliveries in the dashed box. If they refuse, ask why. If they comply, show it to them on October 2nd. So these are Tesla's actual deliveries by quarter on this chart, with the all-time high quarter being 310,048. That was set in Q1 of this year. So ask your favorite Tesla hater who claims that the growth story is over and that there's no demand to just fill in, starting right here, as high as they think it goes, where is the Q3 deliveries number going to come in? And then when they provide it back to you, just make a little mental note of that and show it to them after Martin Vieca posts the numbers on October 2nd, about noon, at ir.tesla.com. Okay, another tweet from the Short Shorts historian. Every now and then I'm amazed at how stupid folks at Tesla Q are. This time one of them made a joke about the Optimus bot, and a few idiots are believing it. Honestly, what is wrong with you Tesla Q people? So here's Paul, the owner, creator, and caretaker of the Tesla Q block list. You were probably blocked by Paul if you have ever said anything nice about Tesla on Twitter before. He's believing the tweet that Justin at Trumpery45, longtime Tesla hater, made of a video he found of a dancer doing a robot dance, calling it a rehearsal for the AI Day Optimus bot presentation. And a bunch of other people here, among them Keith Leach, Wampy Wombat. This is the Australian who has for many years been submitting bogus safety claims to U.S. regulatory agencies for vehicles that he has never owned or personally seen with his own two eyes. He would just find pictures of wrecked Teslas online and then create bogus safety complaints and file them with U.S. regulatory agencies. That's what this guy does. He fell for it, hook, line, and sinker. So, crazy stuff. Next, a tweet from Elon Musk that I liked. The terminology is outdated and inaccurate. This is a tiny over-the-air software update. To the best of our knowledge, there have been no injuries. What's Elon talking about here? It's a tweet from Stock Talk Weekly that Tesla was recalling 1.1 million vehicles. Typical NHTSA FUD. Tesla said it will perform an over-the-air software update to solve the issue with the automatic window reversal system. This is not a physical recall. So what's this chart showing? It says Tesla handles majority of industry remote software recalls. So since January 1st, 2020, Tesla is the only automaker performing a large share of recalls through over-the-air software updates. So if you're Ford, you had 100 recalls, 0 of which were fixed with over-the-air software updates. GM was able to fix 1 of their 78 recalls over the air. No over-the-air updates for Volkswagen of their 66, etc. Not going to read them all to you. And then here's Tesla over here with the fewest recalls, only 19, 7 of which were fixed with over-the-air updates, which these 7 are more than all of the competitors combined. They manage 3 total over-the-air software updates. Tesla more than doubling that by themselves, and with and are the only automaker with fewer than 20 recalls during this time frame. of those shown on this chart. So I thought that was a good tweet from Elon, replying there. Next, a tweet from Shorty Air Farce at S Air Farce on Twitter. Oh man, we've entered a new level of insane. The Tesla shorties, aka hashtag TeslaQ, were 100% serious about launching a new parking lot truthing venture. Since they have been ineffective against Tesla, they are now going after Hertz and Tom Brady. They're calling it Operation Where Are They? I guess Operation Insane Short Sellers Stalking Hertz was taken. I suggest Hertz parking lot truthers as well. There has to be a pun here to be made about Truth Hertz. I'll work on it. So, yeah, here's the aforementioned Paul Dezan, owner of the Machine Planet Twitter account and the Twitter block list. So I'm not going to read his whole insane tweet to you. But, yeah, he wants pictures either if they do have Teslas in them or if they don't have Teslas in them, which is great news for you, because if you have any pictures, you can send them to Paul. So either the pictures you send Paul will have Teslas in them or they won't, because that's the nature of photographs. All of them either have a Tesla in them or don't have a Tesla in them. Paul welcomes your photographs, submissions for his project, if they have Teslas in them or if they don't. Yeah. Bothered some poor Hertz desk employee with better things to do, asking them how many Teslas they have. Yeah. By the way, who has time in their lives to drive around busy airports and take pictures? Pictures of cars that don't exist. Good times. This is... I would love to say that it's surprising, but it's not surprising, really. It's just funny because it's such a Paul Dezan thing to do. To start a Hertz rental Tesla truther organization. That's what's going on here. So, yeah, my prediction is that this will work out as conclusively as all of Paul's other parking lot truth exercises over the years have. Sometimes there will be Teslas in the photos, and sometimes there won't. And the Shorty Air Force, and the Shorty Ground Force will draw conclusions based on the data they amass. All right, next a tweet from Shadows to Dust at 80s Couple 2021. Me and the wife were walking the Golden Gate Bridge and decided to count the number of Teslas headed northbound from one end to the other. We counted 120 Teslas that passed us. I think these cars might be catching on. I was the only person to like this tweet. But I thought this was a good tweet. It's because it was a reply to a very old tweet of mine from June 12th. This is my pinned tweet. So that's why nobody else saw it and liked it. I was the only one who saw a notification on it. All right, next is Matthias Fons at HolgerDanska9 on Twitter. You have an excellent track record, James. What is more important, in my opinion, is that you do concise walkthroughs explaining your thinking and estimates so people can learn from you instead of just copying or blindly following your estimates. And he left a link here to my YouTube channel. So this was Matthias's thread about high PE multiple investing. Is it a bad idea to invest in a high PE company? Yes, if there's no good reason why the PE is high, is the short answer to that question. If there's a very good reason why the PE is high, then probably it's a good investment, which is not investment advice, for entertainment purposes only, do your own research, etc. So there's a long thread here, and at one point in that thread, Matthias, I hope I'm maybe it's Matthias, I don't know, brings in me to the conversation, saying I'd highly recommend following James if you're interested in learning from his extensive and detailed Tesla valuation model. Wait, did he mention me previously? Because it would have been pretty weird for me to only jump in. I thought there was another tweet from Matthias. All right, so anyway, what I was saying is, for those of you wondering why you should even care what some random Twitter user's forecast for Tesla earnings is, here's how I did forecasting Tesla earnings last year. I was a lot closer than Wall Street. So this was the forecast that I published to Twitter on November 1st, 2020, and these are the earnings Tesla actually reported after the end of 2021. So 13 months later, the results were in, and I was within, $0.4 billion, somewhere in that range. A lot closer than Wall Street got. Most of them had a much lower number than this as their estimate for 2021 actuals. And if you look at my variances across the board, none of them were way off. And when I say that, I'm counting stuff like automotive sales revenue. A $1.4 billion miss is pretty big, but if you net that against the automotive sales cost of sales, which went the other direction for $1 billion, then this was only a $0.4 billion variance at the automotive gross margin line, right? So really, it's, if you come to right here, this is the total gross margin variance. It's that same, $0.3 billion that I was off by. So you have to get lucky to get that close for sure. So that's why I like that tweet from Matthias. Next, a tweet from Dave Lee. Dave was laughing. Why was Dave laughing? It was at Farzad Misbahi who tweeted, or Farzad, if I can pronounce his name the way he pronounces it. Please list company ticker. I have no idea what company you were talking about. And this was Dave's thread. 1 year ago, the 30-year fixed mortgage rate was 3.05% in the U.S. Today it's 6.62%, which you can see on the visual here. Yeah, I'll hide myself so you can see what that looks like. So let me get rid of this now and show you my reply. At times like this, I am happy to be invested in a free cash flow generating company that does not need to borrow new debt at current rates to fund their ongoing operations, pay dividends, and make payments on their old debt. That is not the kind of company you want to be invested in a high interest rate environment where they have to keep going back and refinancing older, lower interest rate debt with newer, higher interest rate debt. That's going to increase their interest expense. That's going to reduce their earnings, right? What these companies ought to do is what Tesla has been doing for the past 2 years, paying down their long-term debt so they don't have any debt to worry about and they don't have any need to borrow any money at high interest rates. But here's a secret for you. They can't pay off their long-term debt because it's too high a multiple of their free cash flow, right? These companies don't have enough retained earnings to pay down a significant portion of their debt because their debt is so large. And if you're wondering which companies I'm talking about that do need to borrow money to fund ongoing operations, pay dividends and pensions, and make payments on their old debt, it's the legacy automakers. That's who I'm talking about. Companies like Ford and GM are potentially going to be in a world of hurt very soon. GM did go bankrupt in 2008, for those of you who are not students of history, with the same business model they operate under today. So here's a very unusual like from me for the account Watusi at Scidude on Twitter. Longtime Tesla hater, longtime Tesla short seller, with a chart. Here is a revenue to vehicle delivery chart that I had not updated in a few quarters that I was recently asked for by some Tesla bulls. So I liked this tweet and I replied to it with my thoughts upon seeing it. Thanks, Watusi. A few observations. You got rid of the trend lines. Shrugging emoji. The scale of the y-axis has gone up a bit. I overlaid the old chart under the new chart at 50% transparency and had to squeeze it quite a bit to line them up. Any learnings for you since July 2020? Why July 2020? That was when I first saw this chart from Watusi, and it appeared this way. You can see the most recent quarter here was Q2 2020. That would have been the most recently available quarter in July of 2020. So what information was Watusi intending to convey by presenting this chart this way in July of 2020? I'll let you examine this question for a moment. Also, these are those trend lines that I mentioned earlier. So that's the old chart, got it? Here is the new chart. New chart looks like this. Maybe not a lot popping out to you from seeing one chart and then the other, which is why I did the overlay, which is this other one. So unfortunately, that's as big as I can make this, I think, on the screen. Yeah, so here's that old chart in the white box. It's kind of handy that the older version was framed in a white box and the newer one wasn't. So you can see these time periods are lined up. So I've got the overlay correct right to left, and you can see the y-axis lined up okay, 10,000, 5,000, 0. Got the 0 right on. It wasn't really possible for me to get the blue and the red bars to line up, and I can't explain to you why that is exactly. But I'm working with the information that I got from Watusi. So I think the purpose of these trend lines at the time was to indicate that Tesla's deliveries and revenue growth rates had already peaked and were going to be limited to roughly staying on the course plotted for them here. But what we've seen in the actuals is that the actuals were the actuals have paid no heed whatsoever to Watusi's limitations and proceeded upwards defiantly into the stratosphere and off the chart. So here's where the vehicle deliveries now are on a rolling 4-quarter average basis, as Watusi has presented them. Tesla's now delivering more than 250,000 vehicles. So you have to read the legend here to understand what's going on. So the y-axis is labeled 25,000, but you have to multiply that by 10 to get the vehicle deliveries number, because Watusi is using the same axis for the revenue dollars, which are being presented in millions. So this 15 here really means $15 billion revenue, which Tesla passed on average per quarter in Q2 of 2021, and has since crossed 20 billion and 25 billion. And this trend is going to continue. The revenue and the deliveries will both continue rising for Tesla over time. But I thought it was more helpful to see what's happened since July 2020 by overlaying these charts like this. All right, that's that one. And I'll back out of this. Well, did I reply to him? Or did he reply to me? Yes, he said, "You're welcome. Last time I did trend lines, people complained. Revenue per vehicle delivered continues to trend down. Also, I had updated it in the second half of 2021. You had a 1-year older chart, okay? I had to fight this assertion, revenue per vehicle delivered continues to trend down, so I replied, where's my reply? Are they hiding my own reply from me? Oh, here. I have to click through here to see it. Here it is. Revenue per delivery in fact bottomed in Q1 2021 and has risen with increased Model Y mix because Model Y costs more than Model 3 does. The more Model Ys you sell, the higher the average ASP will go. And price increases Tesla made to prevent the backlog from getting too long and in response to cost pressures. And then I retweeted myself with a chart demonstrating exactly what I just said, that these red bars hit their shortest point in Q1 of 2021. Revenue and cost of sales per cash delivery, excluding leased vehicles and regulatory credits. And I expect these to trend higher and higher in Q3 and Q4 than they have been since, all the way back to 2019. We're going to see the highest ASPs we've seen in more than a year, more than 2 years, is my expectation. Okay, so just wanted to show you that real quick. These are my likes again. The next tweet that I liked came from JPR007. The Statista data is wrong in terms of vehicles made by GM. The correct number of vehicles delivered by GM is 2.9 million, and GM themselves state that clearly. Here's that 2.9 million. This is wholesale deliveries of vehicles that GM produced. So that's what this is. I'll follow this through so you can find the context, which was another tweet that I started. I saw some tweets today about Tesla having a demand problem from some of the same handles who've been tweeting for the past 6 years that Tesla had a demand problem. But those handles never seem to tweet about Ford or GM having a demand problem. Even though if you look at this chart, let me hide myself again. Here's what's been happening with Ford's global deliveries. They started at almost 7 million and have come down below 6 million, below 5 million, very recently below 4 million. That is a substantial decrease, right? Maybe I can bring myself back into the frame here because I'm not really hiding any information at the top right of this chart. GM has seen a very steady decline almost every quarter. They're selling 500,000 less vehicles than they sold, or not quarter, almost every year for the past 6 years. GM has been selling about 500,000 fewer vehicles than they sold the year before, as you can see on this chart. And then what's Tesla been doing since 2016? Well, in 2016, there were no Model 3 sales. So this is when Model 3 started being produced. And then it ramped up some in 2018 and 2019. And then in 2020, Tesla started selling Model Y and continued to ramp those up in 2021. Spoiler alert, the 2022 number will be more than 1 million. It won't be close. It'll be substantially more than 1 million. So the trend is your friend. 2 of these have a demand problem, and one of these has the demand problem of having too much demand, and that's Tesla. So Esben replied, something is wrong with the GM delivery data in either your graph or in this, citing Statista's chart. This data is wrong because this data includes vehicles produced in China by SAIC, which is not GM. So it's confusing because this is a joint venture arrangement. It's kind of like a licensing arrangement where SAIC didn't have valuable brands and they wanted to use General Motors, Cadillac, and Buick brands in addition to the vehicles that they make that are totally unrelated to General Motors, such as the Wuling Mini, which is this, $5,000 ASP micro EV with a 70-mile range and a top speed of 60 miles per hour, and it has no airbags. This little tiny death trap EV, GM has nothing to do with, and those numbers are included in these totals here. which is not the way you should do it, because you can't double count those deliveries as having been made by General Motors and also having been made by SAIC. If you're going to say GM made them, then you have to say SAIC made 0 cars, right? You can't say that because they did. So that's the confusion of this Chinese joint venture. Think of General Motors as being an investor and a licensor of their brand to this Chinese company who's producing cars and slapping Buick and Cadillac name badging on some of them. All right, so that was that tweet. Next, a tweet from Farzad, who one of these days I'm going to start pronouncing his name correctly the first time I say it. Farzad Misbahi. On behalf of all Iranians, thank you, or Iranians. I always think of how I'm supposed to pronounce the word after I've mispronounced it. Thank you to you and all your teams. What are we talking about here? This was Secretary Antony Blinken's tweet. We took action today to advance internet freedom and the flow of information from the Iranian people, issuing a general license to provide them greater access to digital communications to counter the Iranian government's censorship. And Elon replied, activating Starlink. The other reply that I liked to this came from Napanlois. For any Iranians reading this, remember that dishes don't have to be visible to the naked eye. They can be covered by cloth, cardboard, plastic, fiberglass, anything with minimal RF attenuation, but nothing metallic or conductive or overly thick. So that's helpful to prevent people from getting busted for having a Starlink dish in Iran. And here's that tweet that you just saw me like moments ago in this video. So with that, you have reached the end of this week's episode of James's Gems of the Week. So if you've enjoyed today's video, click that like button. If you're not subscribed to my channel, why not go ahead and subscribe to my channel? And click the notification bell if you want to be alerted when I post fresh content to YouTube. You could join my channel if you want. There's a join button there. You could be my first executive producer if you are way ahead on your retirement goals and looking to support what I do in a really big way. And I will shout out your name at the end of every video as soon as I have an executive producer. And I will see you in the next one.